FX Radio YouTube webinar series for our premium listeners, as well as giving you a free 10 minutes for Global FX Radio. I'm your host, Andrew Spanton. Sunday, October the 12th, 2008. An incredible night, incredible day in markets around the world. Hopefully in a couple of years, we're all looking back at tonight and saying that was the bottom. I'm not sure, but it could be. But boy, things are not very good in the world, that's for sure. Okay, today's webinar, we're going to be talking about Fibonacci, Fibonacci retracements, Fibonacci, a little bit about Fibonacci extensions. What is Fibonacci? Well, Fibonacci was basically something that was identified by mathematician Leonardo Fibonacci. It is a series of numbers and formulas that, in my opinion, if you want to know the definition and really go through it piece by piece, just do a search on Google. I'm not going to waste my time talking about all the different numbers and sequences and this. The bottom line is this. Fibonacci, and again, do Google on Fibonacci retracement, and you'll come up to the Investopedia, and that has a pretty good definition exactly what it is. But for our purposes today, because we only have 10 minutes, I basically, what I'm trying to help you folks understand is the relationships between what retracements provide you as a trader, as well as its interaction with other technical indicators, such as moving averages, channel lines. The basis of Fibonacci is just nothing goes up or down in a straight line. That something that keeps going higher is going to eventually pull back. And Fibonacci is something that is a formula that many traders use. And as long as many traders use it, it means that when we approach certain retracement levels, and the most important ones are 38.2, 50, 61.8. Those are the three majors. And when an investment vehicle, such as we're looking at foreign exchange right now, but it applies to any investment vehicle, any chart at all, you look at, if the marketplace that's looking at that chart, is trading that market, is looking at the same numbers everyone else is, it's going to have an impact. So whether or not you agree with Fibonacci or not, I would say at least 30% of traders that trade any market utilize Fibonacci. And that means when things retrace to certain levels, there's going to be buyers and sellers at those levels. And that creates investment opportunity, trading opportunity. So the key is, obviously, is to be identifying the highs and the lows, where to draw, where to start the Fibonacci retracement from. Well, in my opinion, it has to be, like in this example, we're looking at the Euro-US dollar, it's got to be from the highs. That 160.40, that double top. So if you're looking for the pullback in this example, and you're saying, all right, where is the Euro going to pull back from? If this was the high, you say this was the top, and now you identify a bottom. And that's why, in my opinion, it's so important when utilizing Fibonacci. The real way to do it, the only way to do it, is really to be able to identify the top and the bottom. Because if this isn't a bottom in this arrow right here, the euro dollar, well then it's all semantics. The next day, if it goes lower, then you have a new bottom to do your Fibonacci bounce from. But in this example, and if you're looking for a nice, let's say, position trade for a week, many traders do that, and you can apply Fibonacci again. Intraday, absolutely. And in this situation, we're going to look at, it was for 5 days. But the key to utilizing Fibonacci is identifying the high and the low, where to draw it from. And what it helps you do is, one, stay on the sidelines maybe, or two, have a profit goal. And I take it from the highs and the lows. I don't, the close can be good. I do like that as well, but really highs and lows. I always draw it from the highs and lows. So in this example, with the euro topping out in July of 2008, down to the lows we just came with today, we can come up with our bounce. But I'm sorry, actually, I want a different one. I want to identify it from this level. So we take the high, 160. We take the low of 39, let's say that was. You draw your line, and then you see what just came up, the 38.2. You check the box. This is this charting package I use, which, again, usually use FX Trek and Telecharts. You say OK, and then you have your levels. As we see here, the 38.2% retracement from the euro high, right, to the low right here, 139, was a bounce of 800 pips. 149.50 or 149.60 roughly was the 50, and 152.13. So the way I utilize Fibonacci is I say, okay, I got this bounce right here. The hammer, the doji. It's a bottom. Now I'm long the euro. Why would I give this away? It has just gone down 2,000 pips. I got a hammer. It's going to bounce to one of the retracement levels. If it violates this hammer, doji, I'm gone. But unless it does, I'm going to ride it out to this retracement level because I know it's a high probability trade, and I know that things, when they're as oversold as they are now, they tend to bounce sharply to one of the retracement levels. This is how I use Fibonacci. This is how I think Fibonacci should be used. But like I said, who says this is the bottom? Right? Well, that candle says it's the bottom to me, and I believe in candlesticks. I believe in candlesticks. Big time. And as you see here in this example, we have gorgeous shooting stars, which I did predict the top in the euro dollar, once it did that, and the bottom. And then we have a bounce. Now, obviously, the fact that the euro could not take this out to the upside, couldn't break through, then it looked like a good short. Absolutely, once we broke to 145. We went straight down to hell. But to make money in predicting this bounce, now this chart could be the daily, this could be the weekly, it could be the 5 freaking minute. It all depends on your probability, your trading style. Hammers on 5 minutes versus hammers on dailies. In my opinion, the hammers on dailies are much more high probability than a hammer on a 5 minute. Hammer on an hourly, though, is a lot more higher probability than a hammer on a 5 minute. So I would say, using the hourly, but you can use the 5 minute candle. You can use the 15 minute candle. I just think the lower down you go in the time frame, the 5 minute, the lower the probability of that hammer and shooting star working. But again, utilizing Fibonacci, in my opinion, the key is identifying that top and bottom. Because then it gives you an idea for what profit target to look at. Because if you're going for a bigger trade, and you got the wrong bottom, and you're identifying that and say, all right, I'm holding on for a couple of days, and it takes out the lows, you just gave up a nice trade. But once you got that top and bottom, and you believe in the position, you like this position, there are other reasons you trade, this is how you identify your profit target. Or you identify where you're going to short it. Letting it come to you. So crucial. And in this example, you see the exponential moving averages, and hey, it broke through. Didn't really help us too much, the 10, 20, 30. One would have thought it would have stopped. A lot of times, and it's not in this example, but I'm using the latest data, I'm trying to give you stuff. A lot of times you'll see a bounce to one of the retracement levels, let's say the 38.2, coincides with a bounce to one of the moving averages. When you see that, that's lining up to be a perfect storm reversal, meaning you have more reasons for a trade. When you have a channel line you could draw that lines up to one of the retracement levels, it's another higher probability that the trade's going to work. They don't always line up like that, but when they line up like that, it's almost like the moon, the stars, and the heaven above, and that trade becomes an extremely high probability trade. Hopefully this helped some of you understand what Fibonacci is. Again, I'm not saying I'm the professor on exactly the equation, but hopefully you understand how to use it as a trader does. Andrew Spanton, Global FX Radio, webinar series. Fibonacci Retracements, Sunday, October 12th, 2008. Oh boy, we're in for a rough run tonight.